Hi, this is the Voice of Heidie Calero, again with one of our economic capsules. And today we are going to talk about an insatiable consumer, government. In fact, it is part of the problems that we have with the fiscal discipline in Puerto Rico as of 2016, when Puerto Rico announced to the world that it could not pay its public service debt. Let's look at some of historical trends in terms of government. Well, in 1974, the government spent like $2 billion, $1.3 billion, or 67% of its total expenses in consumption, this blue shaded area, and 700 million, the orange shaded area, in investment, or 33%. 4 decades afterwards, in 2018, the government spent $9 billion, of which $8 billion, or 89%, was in consumption and only 11% in investment. Why is this important? Well, as I've said in other capsules, investment is the principal economic motor of any economy because it generates future productive economic capacity. And it's not only in housing, it's in infrastructure, it's in industrial buildings, it's in utilities. So if Puerto Rico was using part of its expenses for infrastructure, how was it funded? Well, this is like a good mystery novel. Let's look at the second graph, where it depicts the percentage of public debt as a percentage of GNP in 1974. All this orange shaded area is public debt as a percentage of GNP. In 74, it was 55%. 4 decades afterwards, 96% of whatever was produced and stayed in Puerto Rico is owed. But notice this green line, and whatever is shaded below this green line represents that public debt as a percentage of GNP was below 55 to 65% of GNP. This is the era that we are calling fiscal discipline in 1979 through 2004. And the important thing here is that fiscal discipline was put to good use. It was used for investment. That was the key to have economic growth. We have made some relations in economics. We have correlations, and it showed a very positive relationship between the increase in public debt and economic growth. And from 1979 through 2004, this period, there was a positive relationship between the public debt and economic growth, and above all, for investment in Puerto Rico. Now let's look at the third graph, which depicts the consequences of this public debt, which grew from $3.7 billion through $70 billion in 2018, which is this orange line, and this green line, which looks like an electrocardiogram. Again, focus between these two lines, that 79 through 2004, Puerto Rico was having positive growth, with the exception of 1982-83, which we had the second oil shock, an economic recession. But finally, we have positive growth. The relationship was, during this period, 7% annual growth in public debt, but almost a growth of 2.4%, real growth in Puerto Rico. Then 2005 through 2018, Puerto Rico in negative growth, decelerating, and then finally in negative real growth with negative 4.7% in 2018, and the public debt in 70 billion. This period, Puerto Rico's public debt grew 4.5% and growth was negative 1.9%. Why? Because again, it was mostly used for consumption, operational expenditures, and not necessarily for investment, which, as I said before, is the motor of any economic growth. I think it's important to renegotiate the public debt of Puerto Rico. We need to get back access to financial markets, but we are only going to do that if Puerto Rico starts repaying its debt. But in order to do that, it's not necessarily with all fiscal austerity measures. It really has to do with economic growth. That is the core of the economy. This capsule has been recorded the day before Thanksgiving, so we wish all of you to have a very happy Thanksgiving. We have many things to thank for those who live here in Puerto Rico, in this beautiful island with this beautiful climate. Our next capsule will be dealing with economic and demographic factors. Until then, see you. Bye.